All right, everybody, welcome. Another live stream here. I'm having trouble getting uh, getting fixed at my 11 a.m. Baltic time start. A little bit late here today for that. So this is about noon Baltic time, 11 Germany, France, 10 UK. Hope all my European friends are doing well. So yesterday I did a review of average monthly returns for Bitcoin, gold, and the S&P 500. In this video, I want to perhaps show the hardest core spreadsheet I've shown in any stream or in any video. A lot of numbers here, but I think it'll just be fun and interesting if you're into this stuff to look at these same returns, Bitcoin, gold, and the S&P 500, but break them down month by month and look at some averages, some overall returns, and some per unit profit as well. So all of that was discussed yesterday in my last stream, chart wise. You could see charts for that, but today just going to show tables. So this is going to be kind of hardcore. Let me bring it up. Okay, so I got three columns here. A lot of numbers, three main columns. Okay, between the black bars. Let me even actually move that up a little bit more so it's not confusing, so you can see the exact header columns. One second, here we go. See if that worked. Go back here. All right. Hopefully that's all fine. I'll keep my face off for now. The joys of live streaming tables on YouTube. Okay. So we have three main columns here between these black bars. Okay, we're looking at price, returns, that is percentage gains or losses, and per unit profit. It's just a Google spreadsheet. You could do this in Excel or wherever. You can do it in Python, but I think this is just the easiest way to put these things together for now. So here we got 1 Bitcoin, 1 ounce of gold, and 1 share of the S&P 500. Okay, and we're repeating this down across the columns here. So you look at average return, you got the same 1 Bitcoin, 1 ounce, 1 share, and the average per unit profit, 1 Bitcoin, 1 ounce of gold, and 1 share of the S&P 500. I said it before, and I'll say it again. You can't buy the actual S&P 500. This is just an index put together by Standard & Poor's. So the actual value of it is what I'm calculating. The changes in the value. Of course, you can't buy an index of stocks like you can Bitcoin or gold, but it's a theoretical calculation, as all of these are kind of really theoretical calculations. You'd have to buy Bitcoin every day at close to get exactly the numbers that I'm showing you on this spreadsheet. I could use the SPY, the S&P 500 ETF, but I'm not going to use that because that's about 10 times smaller. It usually is about 10x smaller than the S&P 500 index, but just for clarity's sake, that's what I'm going to use here. So 1 Bitcoin, 1 ounce of gold, and 1 share of the S&P 500. Let's look down this column now. Let me put my face back. Maybe it's a little bit more enjoyable. Probably not. But, okay, so you have here, we have the price summary, all right? And its top little section here that I'm highlighting is going to give you all the statistics that are most interesting for the data. But let's start down below here. What am I actually showing here? I'm actually showing average daily price. Okay, I'm summarizing it by month, but it's an average daily price during a particular month. Okay, I'm highlighting the winners here in each column. We're looking at, again, Bitcoin, gold, or the S&P. This, of course, doesn't make much sense to do it for price itself, because you can buy any amount of Bitcoin. You can theoretically buy any amount of gold, even though everything is priced per ounce. You definitely can't do that in actuality, in reality, in the markets. You can buy maybe a 10th ounce round or a half ounce round, but that price even won't be the same spot price as 1 ounce. And for sure, even if you buy 1 ounce of gold, the spot is pretty you're going to have a pretty nice fee every time, regardless. So that's something to keep in mind. All right, so looking here at Bitcoin, gold, and S&P 500 again. Just average out the prices, and let's go back in time to where I have the first date of Bitcoin data all the way in June of 2010, actually May 22nd, 2010. Okay. But averaging all of June's data, all right, it's the first full month of my data, 1 cent per Bitcoin, okay, rounded. $1,200 per gold, $1,000 for the S&P 500. So these are kind of our entry-level numbers, and then we're just going to look through the months here and see how things evolve. We can see here in 2011, 2012, anybody that knows Bitcoin during this time, it was super cheap, under $1. If you look back through the pricing history, had a big boom here in the summer of 2011, averaged $20 even in June. It got over $35 for a moment. First MTGOX hack also occurred during this time. Gold was $1,500 an ounce. S&P 500 $1,200. Okay, $1,200 the index value. And we just move on as we go, right? Month by month. These are average daily prices. Okay, it took a long time, again, for Bitcoin to get back over $1,000. It did that, I mean, relatively long time, I should say, 2 years from 2011. It did that here in December 2013. But this is an average daily for the month. Okay, so in December 2013, the average was only $790. Gold down to $1,200 at the time. S&P up to $1,800 from the beginning. Okay, now I'm not going to go through all this, and these are just prices. And again, the shading indicates the highest number, but of course, buying 1 unit of something doesn't really matter. Certainly with Bitcoin, you can buy any number of units, half a unit, 0.0234 of a unit, 0.0014 of a unit, a couple sats, whatever. So this highlighting here doesn't really matter in this column, but I'm showing you nonetheless. Okay, let me take my ugly mug off here and go back to the full screen, just so you can see what's happening here now as we move across the aisle. Now let's look at returns. First thing to note here is up in the little summary area where I have month and month count percentage and month count. It's different than I have here to the left with price, where I'm using days. Okay. The reason for that is because gold and the S&P 500 actually take weekends off. It is true you can find gold prices on the weekend in certain markets, but really gold doesn't trade on the weekends, and stocks certainly don't trade on the weekends. Yes, I know some brokers, you can do that now, and there's futures on the weekends, but markets still take the weekend off, and Bitcoin does not. So that's also interesting. So I can't actually give you daily counts here because it wouldn't really make much sense on the weekends. We could do business days, but then, again, you're still foregoing the weekend, so Bitcoin's going to have more days. So it gets a little bit hairy. It's not insurmountable, but my workaround for that is from here, I'm working out. I'm only going to work from the monthly averages to the left. Okay, so that's how you're going to find these values, these returns. Okay, so many analysts do it different ways, but the leftmost column, the price summaries of all these things, Bitcoin, the S&P, gold. These are from daily averages, as you see in the red here, day count, day percentage. And once we get to column P here and to the right, we're working on monthly averages. It is in fact calculations from the daily, but it's a monthly frequency is how we're dealing with these things. Okay. So now these little green shaded cells are going to make more sense. Okay, here I'm still showing it just for fun, like what's the dominant, what's the high value, the high watermark in green here on the left. Bitcoin became worth more than gold and the S&P 500 from 2017. Never looked back, on a per unit basis. But again, that means nothing really. It's kind of interesting. I actually will talk about it a little bit later. But what's more interesting, of course, is the returns. So for that good stuff, it's the middle column here. It's this return summary. So just looking down the columns of the middle section here, from columns P to S, we have monthly returns. And as one would expect, when Bitcoin was very small and growing very rapidly in the early years, first averaged a penny in June of 2010, then 4 cents in July 2010, you're going to get huge returns. These are huge monthly returns, right? 373% in July over June, 57% in August over July, so on and so forth. But, and gold very rarely beats Bitcoin, okay? Only when Bitcoin's having, the bust, as we call it, or these retracements from the booms. And S&P, the same. Okay, they don't beat Bitcoin as much. But if we tally all these up, we go through, it's interesting, even as Bitcoin grows in value, which we see that Bitcoin as a per unit value is bigger than the S&P 500, is bigger than gold in 2017. We're still seeing Bitcoin, have a lot of green months, meaning it has a better return over gold, has a better return over the S&P 500. Of course, it doesn't here during the really deep retracements of 2018. But it's still on average pretty good. And this is, again, I just want to. Sometimes it helps to just step back and look at the gross numbers and the averages, and let's just sort of answer some simple questions here. So we move on towards today. Still in the middle column here, the return summary. We have all these green values for BTC. So let's actually average them out and see what we got here. Okay, so we got 174 months, which again is a little bit less than the time here because I'm using every day from May 22nd, 2010. Here I'm using every month from full month end, July 2010. Okay, that means why is it July and not June? It's because I need a full month on a full month. All right, to do this work. So it's full month end July. That's when we start to do this. So we got 174 months here, not counting June, not counting a little bit of May 2010. 14 and a half years. So a little bit less when we do this return summary because we got to start somewhere. Okay, we're looking again at one Bitcoin, 1 ounce of gold, 1 share of the S&P 500. this is where it starts to get interesting. This first example. Let's just count up the green months for Bitcoin. All right, that is where on average Bitcoin had a green month compared to the prior month. 89 months out of 174 months. That's 51% of the time. Okay, and gold only beat Bitcoin 44 months out of 174 months, and the S&P 500 only beat gold 41 months out of 174 months. Now notice here, so we have 3 assets, and Bitcoin is ahead 51% of the time. Okay. If we took it down to 2 assets, it doesn't mean that Bitcoin, well, yeah, it basically, let me restart that. If we take it down to 2 assets, you're basically going to, not have to worry about the other one, and Bitcoin's just going to have a super majority, 75% roughly. Again, incredible. Whether you're talking about gold or stocks, it's just very difficult to see why one would want to bet against Bitcoin, even now, with 15 years of data under its belt, 14 and a half years to be precise, of return comparison. Okay, price return comparison, 15 plus years of the system itself, 16 years. All right, so it's very difficult to see why anyone would want to bet against Bitcoin at this moment. And again, how much bluster have we seen? How many times has Bitcoin been declared dead? This is what I just want to keep drilling home. And perhaps I'm preaching to the choir here. I know that I usually am. But if there's someone that doesn't know much about Bitcoin and you just want to understand why it could be value, it's not that it can be valuable just because of price. Indeed, price is a major factor in bringing people to Bitcoin, in driving Bitcoin adoption, no question. But it is a representation of the amazing adoption of Bitcoin that will keep people coming to it, and just show that we are in an adoption phase here that is just so much stronger than something like gold, or so much stronger than your average person opening up a interactive broker's account to buy more stocks. Bitcoin is being adopted way faster, way more around the world by way more people relative to gold, relative to stocks. All right. So now that we have said that, let's go and just drill home these averages, because these are pretty impressive as well. Okay. If we just look at the trailing year of Bitcoin, and we're just averaging here. These are simple averages. I'm not taking compound growth. I talk about that a lot. Let's just keep it simple averages. Bitcoin, if we averaged these returns in 2024, okay, and there were some down months for sure, down 4% here, but up 32% here in November, up 13% in December. If we just did simple averages, 8% over the last year. Gold, 2.2. Gold had a great year, by the way. Gold had a great year, 2.2% average. S&P 2.1. Also good year for stocks. Let's go back 5 years. Let's average these monthly returns. These are monthly averages. 5.8% per Bitcoin. Gold, 1% average. S&P 500, 1.2% per month on average. Go back 10 years. Only gets better for Bitcoin, 6.5%. You get under 1% now for gold. S&P stays at about 1% per month. Okay, so Bitcoin, 6.5 times better than stocks, over 6.5, 7, something, more than that, better than gold. All right, in terms of returns. Now, if we just take the all-time average, and this is a little bit of a shaky figure because, again, you're going to average it, you're going to weight these values the same. Way back in 2011, when Bitcoin was a smaller price value, you're going to weight it the same as today. I understand that, but still, it's just kind of for fun. 16.7%. We do it for gold, 0.5%. All right, all time just means since the start of this data set, since mid-2010, 1% for stocks. And then the median, this could be a little bit more representative of Bitcoin, you could say, for the all-time figure, 3%. All right, that means you just stack up all the percentages themselves, pick the one in the middle, 3% for Bitcoin. Gold is 0. Gold is flat. All right, remember, gold started here at 1,200, went up, went back down, back to 1,100 here, 2015. All right, right now it's up to $2,600 an ounce. But still, if you took the median of all the returns, Peter Schiff's pet rock, the favorite asset, 0% median return, 0% median monthly return. Really incredible. S&P, much better, 1.5%. So, again, these are just very basic statistics, simple probabilities, but you have an asset here that is doing better than gold and the S&P 500 51% of the time. All right, and that's 3 assets. If you take one of those assets away and you look at head to head, I mean, you're in a super majority. Bitcoin wins. Really, really incredible. All right. Now, next one I want to look at now is per unit profit. Okay, per unit profit here is a little bit hard to get your head around, but basically all that I'm doing simply is I'm subtracting the average monthly price from the prior month. Okay, so in this example, all right, let's look at Bitcoin. It's the exact same thing, by the way, as a percentage return, but I'm simply taking this 11,659. I'm taking 98,238 average price for Bitcoin in December minus 86,579 average price for Bitcoin in November. You're going to get 11,659. So that's your average per unit profit. Of course, it could be loss if it's negative, and sometimes it is. Look, it was negative here in August, July for Bitcoin. April's negative as well, and it's a loss, negative profit. And on we go with gold, with S&P. Again, look at the changes here. They are overwhelmingly in favor of Bitcoin. Okay. If you look at 174 months again in this metric, Bitcoin wins 45% of the time. Okay. And again, this is a little bit different because this is gross. So depending on the percentages mean a different thing depending on the base, right? So Bitcoin, actually, it's harder to have a bigger percentage now that Bitcoin itself is bigger. That's always something to keep in mind. Okay, but it's also easier to have a larger dollar value return per unit than gold or the S&P. But still, actually, in this case, if we look at the lifetime, Bitcoin only wins 45% of the time, which is interesting. It's less than the percentage. Okay, so it's just, again, a different way to look at it. I think that's interesting. We go back here. Obviously, Bitcoin was winning percentage-wise. This is the reason why it's losing here. We go back to the early days. Bitcoin was winning percentage-wise, we can see, but it was losing dollar-wise. Okay, so you could have actually gotten more on a dollar basis per an ounce of gold here, a couple times in 2011, and the S&P as well. So that's why it's different than the percentage. So just something to keep in mind. But these start to also illuminate on what Bitcoin can do over time compared to any other asset. Okay, so let's look at the trailing 1 year now. This is very simply if we take 98,000 subtracted by December last year, 42,000. What's that? 55,690. Okay, so we're still on the per unit profit, but now we're expanding the time zone a little bit to get a different look. This is just all monthly changes. All right, just to give you the flavor of it and see how many times Bitcoin wins 78 times out of 174, or 45% of the time. But on a per unit basis, Bitcoin wins in the last year by 55,000. Okay, that's basically if you had bought in December of last year, sold December of this year, you got a $55,000 profit. If you did it 5 years ago, and this is where it kind of gets goofy with Bitcoin, but there's actually a point here. $90,000. All right, if you bought Bitcoin 5 years ago, just held it, you made $90,000. Okay, held it, and this of course is the end of 2024, and it's not the exact end. I'm still using average numbers, average of the daily. So our final value here is 98,000. Keep that in mind, $98,000 Bitcoin. So you would have had $90,000 had you just bought and hold 5 years ago, and you would have had $97,000 had you bought and hold on average 10 years ago. Now this one is interesting here. Look at this trailing all-time sum. How did I calculate that? Well, again, because I don't have averages and medians here. I mean, there's a little bit different calculation for the per unit profit. You got to wrap your head around it a little bit here. So the trailing all-time is simply, all right, I'm going to take the latest, which is 98,238, minus the first, the first month average per the time period, all right, per our analysis period. So Bitcoin is always going to win here, certainly against gold, certainly against the S&P, and actually against most assets in the world, okay? So this means that if you bought Bitcoin in 2010, you've done on a per unit basis better than almost every asset in the world. I was thinking about this. It's actually not been every asset, okay, every publicly traded asset. Berkshire Hathaway A shares are over $600,000 at the moment, okay? So again, you don't have to buy. You can get, well, actually, you can't buy A shares at all. But if you buy B shares, you don't even have to buy a full B share anymore. I understand that you can buy fractional shares with your brokers these days. So in some sense, again, the per unit value is kind of meaningless, right? It's almost more important to look at the percentages. I understand that. But this is an interesting idea to continue. Is that as you talk about just the soundness of an asset, sometimes it's interesting to look at a per unit basis, right? I mean, that is how returns are calculated. We can fractionalize anything, right? Certainly Bitcoin we can fractionalize, but it's meaningful. It's not empty logic to start talking about what something looks like on a per unit basis over time. So it is true that we're being very helpful to Bitcoin as we're starting this analysis at the beginning of Bitcoin. And so if you look at this figure, according to that, Bitcoin's just whatever the last price is, and assuming the Bitcoin system continues on, the power regression is, we think it will. Basically, this value is always going to be the Bitcoin price. All right, you can subtract by 1 cent average cost back in 2010. Okay. That's not the case for gold, though. Look. With gold, you got to subtract by about $1,200 per ounce. Look at this last sell here in June 2010. Same with S&P. You got to subtract by 1,000. But it is actually true that Berkshire, for sure, I'm sure there are some other assets as well. Although I'm not sure which ones. Because again, you'd have to do some split adjusted with Apple. I don't think it would work even with Apple, and Apple definitely wouldn't work. Berkshire has a much better return over time. But again, are we talking about 2010 or all time? So if we just look at a per unit basis for an asset, then Berkshire is probably the best. $600,000 plus Berkshire A shares, probably the best anybody could do in the public markets. If you'd bought back in the 70s or the 80s or whenever, you would have had a per unit profit still better than Bitcoin. Now, undoubtedly, most of us that understand Bitcoin and understand the value, the utility of it, understand that that's going to overtake that value over time, that Berkshire A share per unit value. But that's just kind of an interesting thing to think about. Basically, whatever today's price is, someone somewhere who took the risk, Laszlo, for example, Bitcoin Pizza Day, he's the person that I used for my first pricing in this data back in May 22nd, 2010. He has a better return than Berkshire Hathaway for sure right now, percentage-wise, pretty sure. But on a gross per unit basis, he doesn't have it yet. Nobody has it in Bitcoin. So that's just something to think about. Gold will never get there. S&P 500 will never get there. Okay, Bitcoin has outstripped it. If you listen to Peter Schiff, stop listening to Peter Schiff, because the broken record has just continually been wrong, and there's no reason to listen to that. So again, it's relatively simple numbers, but really, if you look at these cells that I'm highlighting here, let's go back to the return summary in the middle. On a percentage basis, 51% of the time, Bitcoin can beat gold and stocks. That's really just a remarkable feat. And if you think that that is somehow dwindling because Bitcoin's price is growing and it's harder to get a higher percent return with a higher base, a higher price, well, again, think again. Look at 2024. Bitcoin won in the last quarter. It won in February and March. So that's 5 months out of 12 months in 2024. Gold had a great year, and it only won 4 months. All right, S&P won 2 months. So it's just not true. I mean, Bitcoin is going to all-time highs, and it's still winning every month on a percentage basis. And if you look at it this way, look at it, the over time probabilistic percentile representation of Bitcoin returns versus gold versus the S&P, you're finding massive gains for Bitcoin that don't seem like they are subsiding. And again, I'm still staying just on the charts or on the tables here. If we go to the charts, we can look at the power curve. We look at the 96% R squared. We can look at all of these things. But the percentages here really show something that's completely different than any random person authoring an article on Bloomberg. I'm happy to say never financial advice, but I'm also happy to say, do your own research, look into it, understand why it's been the best performing asset of the last decade by far. All right, 6.5% per month on average. Okay, S&P 500, 1%, gold less than 1%. Which, by the way, if you think about those averages, those are still, there's volatility in there. And perhaps I can add volatility in future updates. I want to keep it more simple, but, these monthly averages are still large, right? A 10-year average of 1%, that means the actual average is 12%. That is over the compound annual growth, which is only 7%. Okay, so, and that makes sense, right? The S&P 500 has been above its all-time trend in recent years. Okay, so you're going to have a higher growth than the all-time. But the all-time trend of the S&P 500 is 7% per year compounded. 7% per year compounded. It, in the last 10 years, has averaged 1% per month, roughly 12%. It's even say it's closer to 13% compounded. Nearly double the lifetime average. So a lot of money printing, a lot of bailouts. Stocks have done fine. They have done fine, to be fair. But Bitcoin has done multiples better, 6.5 times better. And, it's not just about where we are in the cycle. It's not just about if you started buying early or not. I don't do a whole lecture on the benefits of Bitcoin, the utility of Bitcoin here. But what you should see is that probabilistically, the market is still telling us, regardless of what you hear, the fake news, Bitcoin obituaries, everything else, the market still tells us that Bitcoin is demanded to be held. And the statistics tell us that it's over 51% of the time for two supposedly relatively safe haven benchmarks, gold and the S&P 500. So that's all I want to do for this one. Guys, thanks for watching. It is a very simple video, basically these summaries, but I understand it's a lot of, it's a lot of data as well. So I'm not sure I'm going to keep doing the tables here in future videos. We'll go back to the charts probably. They're easier to understand. But I just wanted to do that here. Basically, Bitcoin has grown at 16.7% monthly average all time. Gold 0.5%, S&P 1%. That is all time, meaning in the last 15 years, 14 and a half years. That's a winning percentage of 51% of the time if you look at returns, 45% of the time if you look at dollar per unit profit. Keep it in mind. Never financial advice. Thanks for watching. Take care.